Today's Friday, February 21st, and this is a status check on a position I took a few minutes ago involving the corn futures, ticker symbol ZC. And as of the time of this recording, the spot price on corn is 492 spot 50. And this is the chart layout at the daily time frame. So each of these red and green candlesticks equals a day's worth of trading. This is today's candlestick here. The red vertical dash lines are system-generated markers for expiration Friday for monthly option contracts. The most recent expiration was back on January 17th. The upcoming expiration is today, February 21st, and the one beyond that is on March 21st. So from this broad look back, I've marked up this chart with a few reasonable support and resistance levels via the horizontal lines. This upper resistance level, I've marked this up as a reference point. I wasn't sure if this was a valid level, but it appears to be doing so at this point, as price has been unable to break above it with any continuation. And what I'm referring to is that for the past few months, price has been ranging to the upside, essentially inside this ascending channel, where each of these yellow trend lines is acting as another layer of support and resistance, as well as the dotted line running down the center of this channel. And what's shown here is that price right now is starting to fall below this dotted line, which is acting as another layer of support. And here, this blue line, 499 spot 60, it could potentially be strong and acting as a strong resistance level. And heading into this crossover of a support level against a resistance level, it appears resistance is winning out, but it's still early, I guess, considering that today is expiration Friday. There is that probability that now that the market could be selling off at this point. If there is a sell-off, then I'm looking for price to come down and retest the following support level of 481 spot 85, possibly heading into the March 21st expiration. So I thought this was an ideal opportunity to short the corn futures. So a few minutes ago, I took a position here when corn was quoted at 493 and a quarter. So the trade is slightly going in my direction, but again, it's still early. So with that, switching over to this trade tab, I didn't short the actual corn futures. I shorted via corn future options. So right here under the option chain section of this dashboard, there's a flag position pegged to option contracts that will be expiring in 28 days, which is pegged to the March 21st expiration. Now, regarding the contract, down here at the bottom left are the details. So I selected the 480 strike price, and as a buyer of option contracts and bearish, I'm on the put side. So essentially what this contract is saying is that on or before the close of March 21st, expiration Friday, I'm anticipating corn futures spot price will be at or below 480. And considering that the general trend is to the upside, right, it's a bullish pattern, there could be a squeeze right here. So come Monday morning, it's possible that this dotted line, the gray dotted line, will hold as support, and then we'll get a squeeze to the upside, continuing this bullish run up. So again, the general trend is to the upside. The fact that I'm counter trading the trend, or essentially betting against the market, I thought I'd mitigate the risk with only one contract. Now this contract will expire worthless in 28 days. My entry price is quoted at $2. And fortunately, the trade is going in my direction, as the premium is now quoted at $2.13. The P&L, the profit and loss side of this ledger, is reflecting a positive balance of $6.25. Now that I've touched on the bearish outlook on corn over the next 30 days or so, as well as the current status of this position, the last thing I want to touch on is the valuation. So here in the description, it says 1/50. So 50 is the multiplier. So my entry price is $2 times 50. This one contract alone, not including commission, is $100. So that's what I've committed into this trade. It's a small position. Again, I just want to mitigate the risk. So it is what it is. So for the purpose of time, I'll pause it here, let the trade work itself out, and I'll pick it up in a few days. Today's Friday, March 7th, and it's been about 2 weeks since I jumped into the corn short. You can see that price did fall below these two resistance and support levels. We have a bounce here at 448 support level, and for the past 3 days, price has been running back to the upside. So it's possible that price could be on its way to retesting 481. But as I was anticipating, price was going to eventually break below 481 and on its way to 448. And so for the past 3 days, price is bouncing. So with that, switching over to the trade tab, the P&L, the profit and loss side of the ledger, is currently showing a positive balance of $968. The option premium is now quoted at $21.38, where I entered at $2. So there's 14 days remaining before these contracts expires worthless. Now going back to the chart, when price dipped below this local support level of 448 back on March 4th, the trade was up a little over $1,300. I was considering taking that opportunity to closing the trade, but I thought because price has been selling off and the tariffs are now back on, I thought that price was going to continue trending lower. So it's possible we might see a two-legged pullback heading into expiration Friday on March 21. And what I'm referring to is that here we have the first leg, right? That's the first leg. Then we have a bounce. And subsequent to this bounce, right, there should be that second leg to the downside. And that would be a classic two-legged pullback. Now, I don't think price is going to spike down that low in 2 weeks time. It possibly could, considering that it's already done that here. So it's reasonable to think that can happen. But now with 2 weeks remaining, I'm going to keep an eye out for another opportunity to eventually closing this trade out. I'd like to protect the gains as best as possible. And so more to follow. Today is Friday, March 14th. So a quick update. The spot price on corn is now $459.50. And trading has corn losing $5.25. So this is today's candle. So as I was talking about in the last update, there's a probability that price was going to start curling back to the downside. However, with expiration Friday, a week away from today, I really don't want to milk this trade out that much further, so I'm looking to close this position out. So switching over to the trade tab, the P&L is now reflecting a positive balance of $968. The option premium is quoted at $21.50, so it's fluctuating. So the P&L is now up $9.75, so it's ranging at this point. So with 7 days remaining, again, I don't want to drag this out, so I'm looking to close this position out. So switching over to this page right here. So this split screen is pertaining to two different charts. The chart on the left is the daily chart, which is what I was covering. The chart on the right, it's specific to my option contracts. So right here, there's a strike price of 480 with the expiration date for next Friday. So if I open up Active Trader, the premium is now quoted at 21,375. As you can see, that's the highlighted. So what I'm going to do is I'm going to place an order to close this trade out with the option premium of 22 and a quarter, and that has a net profit of a little over $1,000. Reason why I'm looking for this, because that $12 should be enough to cover the fees associated to getting in and out of this trade. So I'd like to see if I could get a full $1,000 profit on this. So there's my limit order. It's sitting right there, and it's literally right below where this candlestick is. So if it just drops down a little further, it should be enough to close this trade out. You can see that corn is now losing $6 at this point. So hopefully we'll see a stronger move to the downside. Yeah. So I will try and record the closing of this trade. Otherwise, I will do a status check if or when this trade is closed at the premium of 22.25. So more to follow. So quick update. Unfortunately, I was not able to capture the closing of this trade, but my limit order was just filled. So right here, if I open up Active Trader, the position is flat. And you can see the last traded quote here is 22.25. So if I click on the gear icon, click on show trades, there should be a confirmation bubble. So here's a confirmation bubble showing I was closed out at 22.25. And if I expand on the details, this was closed out about 6 minutes ago. So if I toggle over to the trade tab, again, the position is flat. I don't have a position here anymore. Again, it's 7 days. It's not much more. So if that two-legged pullback does happen, then it's possible to see that corn could come back down to less than 400. So I'll see how price reacts at this support resistance level. If there's a consolidation phase, I may consider, but I have to be patient with that. So again, switching over to the trade tab, the position is flat. So just a quick breakdown. My exit price was at 22.25. I need to multiply that by 50, as that is the multiplier shown here in the description of this option contract. So times 50. The gross P&L is a little over 1,100, and minus the $100 to get into the trade. So minus the fees. Again, this should be a little over a net profit of $1,000. I'll provide a breakdown at the end, but until the next trade setup, I'll see you.